Hello and welcome. You tuned into Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through how the markets shaped up today and the cues to watch out for tomorrow's trading session. Well, first up, let's take a look at the market and how they ended the day. Well, absolutely flat is what I would say. As far as Nifty and Nifty Bank are concerned, both in tandem. If you look at the charts, also very range-bound trade coming in. In fact, Nifty at one point scaled the 25,200 levels, and there was a point of optimism where this might break out of that range that we have been trading in for so many sessions, but we succumbed to selling pressure in the second half, and we closed the shop towards the lowest point of the day. In fact, very close to yesterday's closing point. 25,126 is where we shut shop on Nifty. Nifty Bank did so. We ended the day at the lowest point of the day, very close to yesterday's closing point as well. 56,438 is where Nifty Bank ended the day with cuts of 0.3%. As far as the broader markets are concerned, today broader markets were underperforming the benchmark indices. In fact, mid-cap was down 0.3%, was down almost 0.5% actually, and the small cap was also trading with cuts of 0.5%. So, all this while the broader market has been a clear outperformer today, they were seen declining in trade, faring. The benchmark indices were faring better than the broader markets. As far as the sectoral indices are concerned, Nifty IT was in focus today. That was up 1.2%. That was doing well. In fact, now the analysts are turning incrementally bullish on Nifty IT, and the breakout that Nifty IT has given from its 100-day moving average is now leading to a rally that we see coming in on Nifty IT. HCL Tech, Infosys, Tech M, Wipro, all of them trading with gains of more than 1.5%. Another pack that was in focus today was Nifty Energy, that was doing very well since morning, but gave up some of those gains. Oil India was in focus today on the back of that big bullish note by Avendus that initiated coverage in Oil India. So that was up in a way more than 6% in trade. BPCL, it was buoying the sentiment in the entire energy pack, whether it's BPCL, Hindustan Petroleum, GAIL, IOC, all of them started trading upwards of 2.5%. But besides that, we also had the Alcobev stocks that were in focus today, especially United Spirits, that slipped away in trade on the back of the fact that Maharashtra government has increased the excise duty on alcohol in Maharashtra, and on the back of that, United Spirits, whose revenue, 20 to 25% of its revenue comes from Maharashtra, and that's why it was the biggest loser as far as the Alcobev companies are concerned. And BSE, that cracked 5% in today's trading session, after it was placed in the ASM framework, where there will be stricter norms and regulations as far as that stock is concerned to avoid any kind of volatility, since the BSE has run up quite a bit. So that's how largely the market shaped up. But Kanishka, tell me, what were you picking up?
That's right. Lots of other stocks also in focus. In fact, Aditya Birla Capital hit a 52 high week during the day, holding strong despite a large block deal that happened on the exchanges. It ended 1.5% higher. On the macro front, we have the World Bank, which has retained its India's FY26 GDP forecast, growth forecast at 6.3%, reaffirming optimism on India's growth resilience, and this is amid global headwinds. Even though the World Bank has cut its global forecast for the global economy to 2.3%. And like you mentioned earlier, energy space was in focus today. Now, within that pack, as you mentioned, Oil India surged more than 6% after Avendus initiated coverage with a buy rating, citing strong fundamentals and also attractive valuations. Apart from that, Texmaco Rail was also on the move. It ended more than 1% higher on the back of a 44 crore order win. So these were some of the top buzzers that made headlines today. But moving on, to understand how we should be placing our bets going forward in the market on the basis of technicals, we are now joined by Amar Singh, Senior Vice President Research at Angel One. Very good afternoon, Amar. Thank you so much for joining us. Now, the Nifty has ended with minor gains, largely on a flat note, but it couldn't hold on to that 25,200 level that we touched earlier in the day. There was an 8-month high. Now, what do charts indicate? Is profit booking expected going forward, or this gradual upside momentum could continue?
A very good evening, and thank you for having me. So, you see, what we need to understand is that Nifty has delivered very strong returns over the past couple of months, and that has been phenomenal from almost, if you look at the levels which Nifty was trading from 21,700 odd levels, currently it's around 25,000, 25,100 plus. So clearly the rally has been very sharp, and we should definitely expect some sort of profit booking. But overall, we've been maintaining a view for quite some time that any dip is a buying opportunity, and that's what we've seen in the markets. Secondly, what we are also seeing is that across the board, we've seen some across the board and across sectors as well. We've seen stocks moving up sharply. Even today, stocks have witnessed a sharp move. If you look at the advanced decline, that is still in favor of the bull. So overall, the structure is definitely positive. And if we look at Bank Nifty, because Bank Nifty, I had been more bullish, and I had been saying that earlier that the next leg of rally would be led by banks, and that's what we witnessed. And post the rate cut by RBI, that has helped even further. So if I look at Nifty for today, for tomorrow, I would say, so somewhere or the other, yes, if I look at the charts from a short-term perspective, they are indicating some sort of loss of momentum, but the trend is up. So what it effectively means is that the bulls are definitely in control vis-a-vis the bears. The shorts have been squeezed hard. And those who look at or would want to enter, they should look at any correction. So ideally, a good support would be the 25,000 level, psychological level, because earlier that was not being taken out, or Nifty hadn't closed above that level. So now it's sustaining over that level, clearly showing that there is upside. We have the weekly expiry also tomorrow, so we'll see volatility there. As far as the upside is concerned, on the upside, 25,250, 25,300. That's going to act as a zone of resistance. So this range is going to be valid for tomorrow. If you look at the derivatives area, today we witnessed long build up there. So we'll have to wait and watch. As far as Bank Nifty is concerned, Bank Nifty is trading at record highs. So clearly, and if you look at Nifty is still to breach its record highs, which it had made in September. Whereas Bank Nifty is trading. So clearly shows that Bank Nifty has been outperforming. Banking has outperformed. As far as Bank Nifty is concerned, good support coming around the 56,000 levels, whereas the resistance on the upside is around 56,700, 800. Again, it's a buy on dip opportunity, and one should look at it from that perspective. Technically, from a short-term perspective, Bank Nifty continues to remain stronger as vis-a-vis Nifty.
Right, Amar, hi, this is Ankita also joining in. Amar, the recovery that we have seen in the market, whether it's Nifty Bank, has been nothing short of spectacular since the March lows. In fact, on the Nifty itself, we are up almost 13% since the March lows that we saw, and on Nifty Bank, the 16% up move coming in. But there's another pack that is doing very well, is seeing good recovery, is Nifty IT. Now that seems to have broken above its 100 DMA. From here on, what kind of moves do you see coming in on Nifty IT?
So if I look at the Nifty IT, first of all, I'll just talk about the Nifty IT index. So Nifty IT definitely has bounced back. You're right that from almost 31,000 levels, it's currently around 38,000, 39,000. Roughly around 39,000. So the rally has been very sharp in Nifty IT. And if I look at some of the stocks, in Nifty IT, so clearly they are indicating that the trend is strong. As far as if I look at Coforge, we are seeing some very strong momentum there. If I look at HCL Technologies has moved up sharply, and it has broken out of a key zone of resistance, because earlier HCL Technology was not able to breach the 1600 and 1700 zone. So it's broken above that. So that's strong on the charts. If I look at Infosys is inching up, but towards 1680, 1700, it would meet with some resistance. Sustaining above 1700, we could witness a sharp move there. As far as some of the other stocks in IT is concerned, I would say if I look at Persistent Systems is moving up strongly on the chart, so it's definitely positive. Sustaining at the 6,000 mark, it could rally towards 63, 6,400 levels. TCS is one stock which really has not performed. So if you look at most of the IT names, TCS is one of the exceptions which really has not performed. It's not able to move up, and it's not benefited from this rally. For TCS to move up, it needs to sustain over the 3,500, 3,600 zone. Then we could witness some sharp rally in TCS. Otherwise, the stock would go in for consolidation. It's a good buy around the 3,250, 3,300 levels from a medium-term perspective.
All right. Thank you, Amar, for that. That's the view coming in on the IT pack. But Amar, if I could ask you, what would be your top recommendations apart from the ones that you have suggested for the IT pack?
Yeah, so I would say one is definitely one can look at Biocon. So what we've seen in Biocon is that today the stock has moved up significantly, almost 4%, but on significant volumes. And if you look at the stock from purely from a technical perspective, it has turned positive on the intermediate term. It has broken out of key zone of resistance. So sustaining about 350 is something which is going to be very important for Biocon. So this is one stock one can look at for an upside target of 389 and a stop loss of 327. The second stock to look at is from the IT space, and that is Birlasoft. This is one stock which has corrected almost from 900 levels. Currently, it's around 430. It has moved up over the last few days. It's inching up higher. So technically, it's strong on the charts from an intermediate term perspective, short term perspective. Long term, it's moving out of oversold territory. So this is a second stock one can keep a close watch on with a stop loss below 400, 393 to be precise, for an upside target of 483.
All right, Amar, thank you so much for joining us today. We'll let you go on that note, and we'll move on to what's coming in from the wise. Loris Belanco, who's a technical analyst at CLSA. Sydney shares his long-term target for Nifty. He also sees India as better performing country amongst the emerging markets. Listen to his view.
We still see positive price action in the Nifty. The Nifty itself has completed this double bottom pattern that we think trades back to 26,300. So, new highs for the Nifty is what we're looking for. In the short term, we can see a bit more of a consolidation, but, it doesn't take away that the double bottom pattern still gives you this upside target of just over 26,300. So new highs for the Nifty. And India, while it hasn't been top performer year to date, we still think it is going to be one of the top performing or better performing emerging markets, and our longer term upside target for the Nifty still sits at over 37,000.
All right, that's the expert view coming in on the Indian markets. But with that, it's time to take a very short breather on this edition of Your Trades. We'll be right back with more.
Because alcohol is also set to become more expensive in Maharashtra as the state government has decided to hike the excise duty. Now, while it is a rise of 78 to 85% for the ordinary Indian-made foreign liquor, the hit on the pocket is softer for premium IMFL brands, which is going to be around 9 to 12%. Now, country liquor too will draw an excise of 14%. My colleague Ashisha is joining in with the details of that.
Well, yes, the entire alcohol beverage industry was in focus today after Maharashtra government went ahead and increased excise duty on IMFL or Indian-made foreign liquor from 3 times to 4.5 times on the cost of manufacturing. This came in as a big news for the entire alcohol beverage industry, although the government says that it aims to generate about 14,000 crores of additional revenue from this move. Remember, this is a major negative for companies like United Spirits. Although there is a caveat in the news that came in yesterday evening, it has spared wine from this particular news flow, both wine and liquor, because of which wine and beer companies were in focus on the back of this. In fact, these stocks were gaining in trade today. But on the flip side, we had United Spirits. Remember, this company generates about 20 to 22% of its revenue from the state of Maharashtra, and brokerage houses believe that if at all this move were to come through, nearly 20% of its sales from Maharashtra will be impacted on account of this, which is likely to impact revenue by about 3 to 4%. And because Maharashtra generates higher margins for the company, earnings could be impacted by as much as 7 to 8%. So major negative that came in from United Spirits, because of which the stock was tanking in trade today.
Right, thank you, Ashisha, for getting us all those details. Now, as we have been saying, alcohol is also set to become expensive in Maharashtra as the state government has decided to hike excise duties. Now, we caught up with Karan Tarani, Senior VP at Elara Securities, and also Sanjay Paris, who's the Chief Executive Officer at ISWAI, who say that this move will negatively impact and might even, raise the MRP by 35 to 45%, and also that people might be shifting to cheaper brands. Now, let's go across and listen into what they had to say.
This is the highest ever percentage price hike that Maharashtra state has announced over the last 12 to 14 years. This is a very good. This will have a very big negative impact in terms of volume offtake across various categories, right from low prestige segment to the luxury segment. Consumers may move from BII, BIO, which is bottled in India, bottled original, the luxury segment towards the upper prestige segment. And this kind of downtrading will continue to the low prestige segment. Low prestige segment consumer may not move to country liquor, which means low prestige segment will also see a negative impact in terms of volume uptake. If you look at United Spirits, they are market leader in the luxury segment. They've got a very strong recall in their Scotch portfolio, the BII, BIO portfolio. As I said, just because the luxury segment is very high in terms of price and we'll see a very steep price increase. So we do see about 3 to 4% kind of a negative impact in terms of revenues.
It's too early to say at this point in time how and what will be the exact impact on MRPs. I think the most important thing is that Maharashtra has always been a state where premiumization, which means consumers were being given an opportunity to move up, and therefore revenue efficiencies of the state was going up, and therefore the revenue per case was going up. Our concern, and at this point in time, is that that process may get, I would say, put brakes on that process, and there would be a concern that consumers may start rethinking their options.
Well, besides the Alcobev stocks that were in focus in the back of that hike in the excise duty, there were a couple of other names that were buzzing in trade. Let's go across to my colleague Ravinder, who's standing by with all the stocks and news. Over to you, Ravinder.
Well, Oil India is in focus, where Avendus Spark has come out with a note on Oil India, and they have initiated a coverage with buy rating with target price of rupees 630. They say that the recent correction in the commodity price present an extremely favorable entry point, and the downside risk for more than price in others. Apart from the HCL Tech is also in focus, where company launches managed SSC solution with Cisco, and also company has also expanded partnership with the Standard to accelerate AI-led transformation and deliver digital first service at a scale. Moving to next, another IT stock, Wipro, is also in focus, where Wipro has extended its strategic partnership with Metro AG for 2 years to extend IT operation using AI, cloud and digital services. And lastly, Narayana Hrudayalaya is also in focus, where Health City Cayman Island Limited, which is a wholly owned overseas subsidiary of the company, has infused an amount of $1 million in Cayman Integrated Healthcare Limited, a wholly owned overseas subsidiary of HCCI and a step-down subsidiary of the company. So back of this, Narayana Hrudayalaya is also in focus.
All right, thank you, Rabinder, for getting us all the stocks that were buzzing in trade today. But let's also take a look at one stock that has been down in trade today. That's BSE. After the recent surge that we saw in the stock today, it cracked significantly. Now, what's leading to this fall? Sharad is joining us now to explain it all.
In focus is BSE, as the stock has received a significant fall, and this is because the stock has been added in the ASM framework, which is the additional surveillance measure. Now, this is coming in because of the recent surge seen in pricing and the trading volumes. We check the Bloomberg numbers, the one-year volatility, the stock volatility is almost 47% as compared to 30% of its peers. Now, what is happening in ASM framework is it's enhanced scrutiny and trading restrictions would be there on the stock, and a higher margin requirements will be coming in when it comes to the trade, and limits will also be coming in for the intraday positions. Now, the current P is also very high, coming in at 89 times, and we did check the numbers. The volumes have not increased, but the stock price in comparison to the volumes has been increasing, especially over the last 2 to 3 odd months. Now, how BSE has moved in last 3 months, it's up 110%, more than doubled in last 6 months. Also, it's up 59 odd %. Now, what has led to this growth? There are certain key factors for BSE's rally. There is strong institutional buying coming in, rally overall in the capital market theme also, which we had picked up last month itself, and a strong Q4 operational numbers. 3 triggers, of course, for BSE includes an eventual listing of NSE and NSDL, especially impacting the entire capital markets theme, and also their market share in the F&O segment. Will it increase or will it stabilize? Interestingly, technical indicators is also something we watched out for. In yesterday's trading session, the RSI was 81 times. That is almost, you could say, it is on a significantly overbought positions. Interestingly, the BSE is still trading above all the key moving averages as well. But of course, a correction coming in after being placed in the ASM framework.
All right, that's time to wind down on this edition of Your Trades. We're completely timed out. Kanishka and I will take a leave. Thank you so much for tuning in.